Merck Co stock, ticker symbol MRK. This stock is up 14% year to date, beating the S&P 500, which returned nearly 12%. Merck reported a beat on EPS and revenue most recently, and for the upcoming earnings, almost all analysts expect another beat. People love Merck Co stock for different reasons, and one of them is the dividend. And I understand why, with dividend yield at 2.38% and 13 years of dividend increases. If we look at the total returns in the past 5 years, we see that Merck stock slightly underperforms the S&P 500. So could this be the perfect time to buy Merck Co stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Merck Co do? Merck is a global healthcare company that delivers innovative health solutions through its prescription medicines, vaccines, biological therapies and animal health products. When diving into the earnings, we see that in the first quarter, Merck reported a revenue of 15.8 billion, up 9% year over year. And to me, this looks pretty impressive. The full year results are also looking pretty interesting after only 1% growth in 2023. It is expected that in 2024 will be a range of 5 to 7% revenue growth. EPS was reported a little over $2, up 48% year over year, including the Harpoon acquisition. We see that in 2023 there was a big decrease. In 2024 it is expected to return to normal levels again, with a range of $8.53 to $8.65 per share. Both the revenue and the EPS are looking really good to me. This 15.8 billion revenue is mainly driven by the human health segment. That is growing at 10% year over year. The animal health segment, representing around 10%, is nearly flat year over year. Looking at the gross margins and EPS, I also do get a lot excited. Gross margins increased 4.3 points, which is insane increase. The EPS increased 48%, as mentioned earlier. To me this looks really good, especially since expenses is going down. In here we see the full year of 2024 outlook, with revenue expected to be in a range of 63 to 64 billion, slightly higher versus the prior guidance. It's the same with gross margin and EPS. Looking at the capital allocation, I think it is also looking pretty good with 2.8 billion in R&D. 0.9 billion in capital expenditures and 2 billion in dividends. 1.1 billion goes to business development and only 0.1 billion to share repurchases. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Merck Co is a 329 billion market cap company. PE ratio is at 142, which is of course insane. But it is impacted by the current situation the company is in. In the earnings presentation we saw that by the end of 2024 they will recover completely. And with that, PE ratio is coming down again. Later in this video I will show you my 3 price targets for MRK stock, so make sure to watch until the end. Revenue is at 61 billion, and in this graph we see that revenue went up in the long run. But it has been a bumpy ride so far. In the past couple of years they were capable of growing the revenue again. In here we see that gross margins are growing in the long run, which is something that I really like. However, both the operating margin and net margin are decreasing in the past couple of quarters. It is expected to recover in 2024 again. For the EPS it's pretty much the same story, nothing really special to add here. Analysis expect that EPS will recover back to $8.74 in 2024. After that, they expect EPS to continue to increase but at a much lower rate. For the revenue, analysis also expect a decline in growth, but to be honest, it is not looking too bad in my opinion. Return on assets is sitting at 2%, which is a really low number. Return on equity doesn't look good either, and the most important number, return on invested capital, is sitting at 2.5%, which is again a really low number. It is also much lower versus the 5-year average, which is not a good thing. Current ratio is at 1.25, which is a great number. To me, this looks pretty good, especially the way it is coming down. Right now, Merck has 34 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Merck has almost 6 billion in total cash, so they can't pay down a big chunk of their debt. This is something to keep your eye on. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up and down a lot in the long run. I would prefer a bit steadier pattern here. Shares outstanding are decreasing over a longer period of time, which is something that I really like. However, most recently they are not buying back shares, so that's something to keep your eye on. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.4%, which is a great number. Annual payout is a little over $3 and payout ratio is at 136%. This number is a bit diluting here, since the reported EPS in the recent quarters was impacted by several things. It is expected to recover in the coming quarters. The 5-year growth rate is at almost 9%, which is a great number, also considering their yield and payout ratio. They increased the dividends for 13 years in a row, which is also nice. And if you take a look at these numbers, the dividends paid since 2012, we see that Merck did increase the dividends at a decent pace. Especially after 2019, the pace increased a lot. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio is going up big time, as mentioned multiple times now. This is because of recent reported numbers in earnings. It is expected to recover soon. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous years. Overall these dividends look really good to me, but how about the historical returns? I decided to compare Merck Co stock with the overall market, in this case the S&P 500. Next to that I added BMY and AbbVie. On the 5-year chart we see that Merck Co had a 95% return versus the S&P 500 sitting at 104%. So they almost matched the S&P 500. And keep in mind this is including dividends. AbbVie managed to outperform the S&P 500 massively. On the 1-year chart things look pretty interesting, with BMI sitting at minus 34%, while the S&P 500 had the highest return with nearly 31%. Merck had the second highest return with 17%. On the 6-month chart it is again Merck that is having the highest return here with almost 29%, versus the S&P 500 sitting at 17%. On the 1-month chart it is the S&P 500 again with the highest return, and it has to be said that Merck is the only stock here with a positive return. Bottom line, Merck Co was beaten by the S&P 500 in both the short run and the long run. But could this be the perfect time to buy Merck Co stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 6, 7 and 8%. based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 17, 18 and 19%. For the free cash flow margin I'm putting in the same numbers. I expect the profit to recover in the coming quarters. For the PE ratio and price of free cash flow I'm putting in 18, 20 and 22. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now, Merck stock is around $129. I hit analyze and we see a lot of red numbers. We have a low price target of $68, we have a mid price target of $83 and we have a high price target of $100. To me, the high price target is the most justified here, meaning the stock is still overvalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Merck Co is that it is an interesting company. A lot of things happened with this company that impacted the EPS and with that the valuation and payout ratio, to name two things. But for now, most fundamentals look pretty good. It is also good to see that they are recovering already and the company itself feels confident to fully recover by the end of 2024. Dividends are looking really good with a decent yield and decent growth rates. I wouldn't mind to see higher growth rate in the future though. From a valuation point of view, things also look interesting. As of right now, the stock is overvalued, but when they are recovering it might be getting very interesting, I think. It would be great if the stock falls down from here, but the company recovers steadily. That means the valuation will start to look better, which is exactly what this stock needs. For now I'm putting them on my watch list and analyze them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.